Alrighty, traders. Good afternoon, good morning, good evening, and welcome to our trading session for today. Hopefully, everyone is doing well. Looks like we are good to go with the stream, and we should be ready to go. I think we may have, Chris. I think we may have picked up that first part where I was actually still setting things up. It might even be on there. But hey, traders, welcome to the AAA session today. Chris and I are going to go ahead, and we're missing Tyson today, but that's okay. We've got a lot to discuss regarding the currency pairs that we're going to be focusing on this week. Remember, it's just more than a week to go before the elections take place. And we'll be having a live session on the 2nd of November that we want to get everyone in. You got to get in. We'll have those links available for you to be able to go ahead and post that in. But make sure, the traders, that you get in. If you haven't already found that link somewhere, get hold of your account rep, get into the session on the 2nd of November. It's going to be absolutely killer. Now, we don't know what's going to happen with the election. Obviously, we've got some sort of idea. You're going to hear from Chris and I today about what we're thinking about regarding trading opportunities heading into this week and moving into the following week, and what our plan of action is. So without further ado, let me go ahead and say hi to Chris. Chris, how are you doing this afternoon?
I'm doing fantastic, Gary. Nice to see all of you. Happy Monday. And exactly right. We are right at the 8-day countdown. So I say bring it on. I'm looking forward to it. I know the markets are, at a standstill waiting for all this to unfold. Even though the crystal ball might be cloudy, we're going to provide some clarity next week when we have our sessions Monday, Tuesday, Wednesday.
Fantastic. Well, excellent, man. Well, let's just dig right into it, man. We've got 3 minutes. We want to make sure that we stick to that timeline. So let's go ahead and jump straight into it. So, Chris, what is your thought process on what are you looking at this week as to trading opportunities? First, number one. Number two, what is your outlook as to your preparation for the U.S. election next week?
Yeah, so last week I was very much risk off. I was looking to short the Qs. I was looking to go short the SPY. I'm long volatility. I actually just kind of doing everything today. I traded some options on Boston Beer. I'm looking at the markets to have kind of a tough start. One thing you and I talked about before the session went live is, look, we have like this super significant earnings week with like tons of market cap up for grabs. We have like almost every FANG stock up for earnings this week. Just to point out some notables, Gary, we have like Microsoft, Apple, Amazon, Facebook, Gilead, I think Boeing, Microsoft, like all of these major companies are announcing earnings this week and the week prior to the election. So I part of me thinks like Wall Street might not be able to do anything about the uncertainty that the election has. And if we look at what's happening around the world right now, coronavirus cases continue to climb to levels where parts of the world are starting to implement lockdown measures once again, curfew levels once again. There are businesses shutting back down again. So we have kind of the coronavirus stranglehold on parts of the world. We have a U.S. election coming up. Earnings or no earnings, it's like everybody's watching. So as we talked about, for the last several weeks, if traders are not sure of how to plan around this current environment, not able to plan around the election, I mean, you should be in this session with us. I mean, Gary, you just said that you're actually in 0 positions right now. I've scaled back from usually like I had about 7 or 8 currency pairs that I was in and trading. I've scaled up back to 3. I'm watching those pairs obviously very carefully, but I am just very objective, very neutral, and I want to be ready for any short-term confirmation, short-term volatility, intraday movement. I just think it's going to be a better way to be a trader without having to carry the burden of like the mercy of the market, right? I mean, if we are in positions and the market does something crazy that we don't like, we're going to be in some really ugly positions. The flip side of that is if you're not in any positions or you're very neutral, I mean, you can take advantage of whatever the market throws your way. So there's no reason to be overly committed to these big, bold predictions when, in fact, the best trading ahead of us might be on like a day-to-day basis. So for traders looking to make some pips during the election, I think it's best to be short-term and objective.
Let me give you an example of why why I'm flat in all my positions. Because if we go to the Euro JPY right here, I'm going to go ahead and show the chart right now. If we take a look at the Euro JPY chart, We had targets set down here at about, take a look right here. We had targets set down here at 121. We actually had long-term targets even further down south here at about 111. It's actually adjusted right here now to 10. Looks like, oh no, we hit that target right there. So, my bad. Actually, this is the target right here. So this is 100 down here. So we had wave 1, 2, 3. We're in wave 4 right here. We're looking at a target down here at 100. Now these are long-term targets. But if you look at the short-term movement that we've been looking at right here, we did anticipate a move down here at around about 121 and change. Now we're trading at 123, 124, and so there's still a bit of movement that we can see to the downside. But the reason why we decided to close out is because I said to the traders in my trading room, Chris, that as we're heading closer and closer to the election period, we got to realize that that if we get a Trump win, and I'm not trying to predict who's going to win or not, but if we get a Trump win this term, then we're looking at similar to 2016. We're looking at JPY weakness. I don't want to be short Euro JPY when we have that election, but I'm going to do this though. And I spoke about this inside my update last night as we posted. And by the way, traders, if you haven't seen it already, if you've registered for the event and you haven't seen Tyson, Chris, and my reviews last week, and I posted the last one on Sunday. But if you haven't looked at it, go ahead and check it out. It gives you some sort of idea what we're looking at as we're heading into the election period. Now, what I'm saying here about the Euro JPY is that, hey, if we have the same sort of result that we had in 2016 and we have same sort of reaction where we can see weaker JPY, then I don't want to be short Euro JPY. I don't care what my technicals tell me right now where the market's going to go. We're going to see a rally in Euro JPY based on weakness out in JPY. But also we're going to see some strong strength coming out in the dollar index, which is going to push the market, specifically the US dollar JPY. If you look back in 2016, we had a 1,700 pip rally in US dollar JPY. And the daily trend range right now, Chris, is around about 43 pips in a day. That's the daily trend range. So for us to have a 1,700 pip rally, that's huge. So that might be something to look out for. But I've already said that what I'm going to do here is I'm going to take a look and see what the results are. If Trump comes in, I'm expecting weaker JPY, which means that if we see a dip in the market, that's an opportunity for me to start leveling in. Then I'm going to start adding on because I'm expecting rally. So I'll add on to that position, start stacking my positions as I'm anticipating price to move. That's if we get a dip before the rally. But if we get a straight out rally out of the results, if the results come out and we see a straight out rally and Trump is wins the election, then what I'll do is I'll wait for a correction move first before I get in on that trade. Now Chris and I, Tyson, we're all going to be talking about these type of trading approaches as we get closer into the election period, right? On the 2nd of November, 3rd, and the 4th, we'll be talking about these different strategies. So getting to the event, absolutely going to be important for you to pay attention to the details. Now, coming back to that, Chris, that's the reason why I've decided to get flat, because now I'm at this point right now. I'm up almost 8% for the month. I'm pretty happy. I'm sitting good. I don't have to force any trades on. I'm going to wait until the election period, and I'm gonna review the daily charts right now. I'm going to just take a look at everything and see how they're all set up. But if I go to the charts technically, and I don't know if you've done it the Sunday, but I went on Sunday and I looked at the charts technically. And I'll be honest with you, man, I'm not predicting a Trump win or a Biden win, but I'm saying it's leaning more. All my technicals are leaning more for a Trump win. If it happens, well, then the technicals are actually true to the markets are right there. So we'll have to wait and see. What do you think about?
I wanted to ask you, do you think it's that clear, like it's that crystal clear that a Trump win means this and a Biden win means this? Because part of me, I mean, as much as I'd like to think that's how easy it can be to trade this, I'm also looking at what happened back in March. I'm looking at what happened with volatility on the dollar index, volatility on the yen pairs, volatility in the stock market. I don't know. I mean, I guess in my mind, I'm just more prepared for the uncertainty and just like a bunch of volatility. So I could see the markets going up aggressively election night because it looks like Trump is going to win or is winning during election night. But that could quickly shift within a 24 to 48 hour period. So I don't look to be as level in focused. I'm not looking to be as position oriented. And that's coming from a trader that trades higher time frames. So even from that note, like I'm just kind of taking it like, by the time we're trading, together on Monday, Tuesday, Wednesday, I'm probably looking at like sessions. Like I want to see what the Asia session does on Tuesday night, what the London session does on Wednesday morning, and then what the day trading from Wednesday, Thursday, Friday looks like on a day-to-day basis. That's really where I think my strategies, my robots are going to start getting busy and start being deployed. Is if we see some wide open spaces, I want to trade the day-to-day volatility because, like you just mentioned, the dollar yen at 40 some pips a day. That's not, this is barely worth looking at. But when we start looking at 45 pips, all of a sudden becomes 200 pips, and breakouts are now hundreds of pips a day, that's when I'm more interested in trying to get in, get some entries, eliminate risk, run with some trailing stop losses, and protect some really nice profits. So I guess question to you is, do you think it's that black and white? Do you think it's that easy to predict that if Trump wins, this is what's going to happen? Because I think we need to be prepared for literally everything.
You're right. We have to be prepared, but listen, we know that the past predicts future movement, and
Right.
so what we've seen in the past is a sort of an indication of what we can anticipate at this year's election. If it doesn't, if the market's going to be whippy-lashy, stay out. I'm definitely going to go ahead and look at ranges, right? Look at solid resistance and support levels and see if market can break through those levels. And if we break through those levels, it will confirm that the trend's on. And that's from a technical perspective. I think we're so locked in on what the result's going to be that we're not really paying attention too much to what the technicals are telling us. I think it's important to realize that, if you look at the technicals, what are the technicals really telling us? Because if the fundamentals say, let's say Trump wins, and let's say in your mind you're thinking Trump wins, maybe weakness out of JPY, and you're thinking about buying in on the Euro JPY. If it's not set up technically, would you just get in? And I wouldn't do that. I would wait and see, hey, listen, does it make sense to get in? I'm not just getting in because the news says that it should rally. I'm getting in because the technicals say, hey, it's time to get in on a trade. And you brought up an important point there, Chris. You said that, you set your robots up to trade that, right? So which means that you are really focused more on the technical side on it, saying, hey, listen, I'm going to deploy it bullish, but if everything's not lined up, my logic's not lining up, it's not going to put me into a trade. And I think that's a good way to fall back on.
Yeah, and there's going to be a lot of scenarios that we talk about, right? So it sounds like I'm leaning a lot more towards short term, and part of that's because I know that between Right Trader Max and Micro Price Detector, Sentiment Strength Line, I've got some really great robots that can run during the Asia session, during the London session, trade those active zone windows, and see where the volatility really sits. If we're focused on high volatility, I'm wondering, will we really see the pound pairs move a ton, or is it going to be primarily focused around the U.S. election on the yen and on the U.S. dollar? What are your thoughts on what currency pairs are going to be the bigger movers during next week's election?
My focus is going to be on JPY crosses, and yes, certainly with Brexit still in the shadows there, we're certainly not going to give anything away from pound movement. If something comes up with Brexit, yes, there could be some movement, but I probably would stay away from the pound JPY and pay attention to all the other JPY crosses, just to stay away from what is currently happening in Brexit. But I am, and to be honest with you, for the first time, I've called it for years, the currency from hell, which is the US dollar JPY. I may even start paying attention to that. In fact, let's dig into that and take a look and see what's going on, because I think that's a pretty interesting currency pair to look at how it's set up technically. So this is what I see right here. If you look at the long-term outlook on this, or at least long-term movement on this, it's horrible. The only time we really saw some great movement on this is when the 2016 election. That was the movement that we saw right there, and it was great. Traders made some good money going up if they got in. That's the biggest problem right here is, do you get in? It's so aggressive, and do you get in on that trade, or you just keep trying to chase the market? So this was a good run right here, and if what we had is anything what we're going to have this year right here, then this rally could see us going up all the way up here to retest the highs up here at 126. So I'm looking at this right now, Chris, and this is why I look at it from a technical perspective. I'm going to go in and zoom in a little closer up. And so if I look at this right here, I know that price is trading. I've already gone ahead and marked it off. I said anything above 105.11, I'm going to be buying. So if you're deploying any sort of trading system, if you're deploying a manual manual execution, if you're stacking in, whatever your strategy is, my point is, hey, listen, if we're above 105.11, I'm going to be looking bullish. And I'm going to look bullish because I'm also looking at this saying, hey, if we miss this ride going up, if this is going to be another 1,700 per rally like we had right here, with no opportunity to get in on pullbacks,
Right.
I mean, look at this. This is,
Right.
let me see if I, 1758. That's a huge move right here, and I can assure you, not a lot of traders got in here. My only concern is, Chris, and that's with the intraday trading, is as we get into that period between the second to the fourth, how's the brokers going to handle our trades? Are they going to start expanding and increasing the margin on specific pairs? Are they going to go ahead and start increasing the spread? Are traders going to experience a lot of slippage during that period? Those are the type of things that I'm a little concerned of. Obviously, if you're trading the European, the Asian session, maybe even the European session, you may not have as much, but that may just be during that the final countdown.
Yeah, I have not seen any correspondence from brokers yet that have illustrated. This would be the perfect week to release something if brokers are. I mean, and they don't have to, but brokers should be notifying their millions of clients out there that, hey, because of this higher expected volatility, we are going to be increasing margins on these pairs. If they let you know ahead of time, that's obviously something to consider. I think because we have a Forex market that's 24 hours a day for 5.5 days a week. The only real slippery period for me would be 5 p.m. if we have some, maybe some gaps. But I'm actually kind of excited that, Tuesday night, election night, 8 p.m., 10 p.m., Asia's open. Maybe we have a really active Asia session. Carry that into Wednesday's London session. I mean, we should have some pretty decent liquidity for those sessions to trade.
I think so.
So that I think from the meat of the week, like Tuesday, Wednesday, Thursday, I think for the most part the trading is going to be pretty fluid, pretty liquid. But again, I'll be looking to see, this week, do we have some notification? And honestly, if anybody is watching, Jason says dollar yen is $400 a margin. Interesting. I'm gonna have to check it. So I'll look at that this week in my trading room, Gary. But I was wondering if any traders out there are seeing notifications from brokers that they're changing margins or changing some of the just kind of margin and risk parameters of these currency pairs. And again, just like we've seen brokers do since 2012 and 13, 14, 16, especially with Brexit. The Swiss did it in 2015. So around these events, brokers are playing their own game and they want to be, hedging the right way, or they want to be positioned the right way, and they'll put all the risk and pass all the risk onto us as the traders. So
absolutely, and if you haven't noticed anything, you may want to check your inbox. Maybe contact your broker, just make sure that if there's something you've missed, that you are well aware of that, because you want to be sure of exactly the conditions that you're trading before it comes down to pull the trigger. So. So there's definitely look here, Chris. I've traded short-term scalping for many years back in the day, but I've moved away from that, and so I don't look at the market. I don't look at the market anymore about, hey, listen, there's a 200 pip rally that we can take advantage of. I'm looking at more things overall. Slowly keep adding to my position, slowly trying to build up my position. But there are times that, and again, like I said, I've moved out of scalping, but there are times that I do want to look for some intraday moves, just for those bread and butter trades on great opportunities. So if the opportunity presents itself, I may just go ahead and just say, hey, I'm going to jump in on that, and maybe we move down to lower time frames, like a 1 minute, 5 minute, 15-minute time frame to pick up some quick profits on that. We actually spoke about that in our the FX trilateral session last week, and we discussed, because for those that don't know, the FX trilateral system, what it does is it puts positions above and below a consolidated range. So when the market breaks out, it picks you up on both ends. Whether the market spikes down and goes up, or just breaks out in one direction, you get picked up in that trade in that direction. So we may be, and I may be even bringing it up in the during our sessions, Chris, talking about certain levels like the US dollar JPY. If the market goes ahead and breaks out of this range, there may be a way to be able to take advantage of that without putting too much risk on the table. But I don't know about you, Chris, but I'm really keen on keeping my stops really far away in case there's a bit of price manipulation, a bit of choppiness. You don't want to get in and out of trades and lose a few percent just by trying to get into something that's not really moving.
Yeah, look, let's go back to the basics here. If you are finding yourself in a situation where you see the markets moving aggressively bullish, aggressively bearish, and you have the temptation to chase that, be careful. Because if you're chasing and you all of a sudden are buying it at a vertical high or a vertical low when the markets are really aggressive, it doesn't take much for a high volatility environment to have this, this wild bullish move and then a very quick bearish reaction or retracement. So
Right.
don't chase. Like, do not chase. I mean, I think it's the one thing you should go into next week. If you feel like your trigger fingers are not quick enough or your reactions are not good enough to eliminate risk and jump in and out of the markets, then have it be a learning experience. Soak in the knowledge, soak in and be a spectator and see what we're doing. I mean, look, I don't want to overwhelm myself with trading decisions either. There's probably going to be maybe I think Gary and I are on the same page. Like the yen basket would be a good basket to focus on because it's highly sensitive to risk on, risk off trading, and it's a sentiment based currency pair. So what the markets are trying to price in or what the markets are believing to possibly push for through the end of the year, the JPY will likely react to that. So, could we have an easy reaction like Gary was talking about? Just if Trump wins, it's a bullish trade against the JPY, or if Biden wins, it's bearish. I also think we could have maybe a 48 to 72 hour cycle where we have nothing but highs and lows, and that's where all the traders get stuck, getting kind of toasted on that high volatility. And then after the dust settles, we actually see the market willing to break out and go higher or lower.
Yeah.
So, and again, in the back of my mind, like I said, I keep going through all these different scenarios and kind of visualizing what we're going to be trading next week and how we're going to play it. But we have to make good, solid decisions. Equity management is going to be the most important aspect, and make sure we're not getting, too aggressive, too risky, chasing things, because the market will quickly prove you wrong. So that's it. I mean, there's a
Yeah.
simple way to approach it. And that's a good thing with all three of us being together is, we'll keep each other honest too. I mean, make sure that we're not making mistakes. And if all of a sudden Gary's like, yeah, I want to trade a mini lot or a standard lot, and he types in 100 lots, it's like, Gary, hey, double check.
I
So
don't
just
know
be
if that's going
careful.
to happen, but hey, anything's possible. But hey, on that point there, Chris, I think it's a very important point. I think during this lesson, if you want to get involved and you want to participate with the movement that's taking place right now, don't see this as, man, I'm going to make so much money and go in there aggressively. I would definitely consider that, hey, listen, if I want to participate, I want to be involved in this, then scale down. Don't let this be a big win that you're chasing after. Let this be some experience in the trading that you're doing, right? Get involved, but scale down your position so that you can get involved without risking too much on the trades if it doesn't turn out to be favorable in your direction. So you can get involved, but you can also manage the risk properly so that you don't get burnt on just one holy grail trade that we're anticipating in the market.
Yeah, and
Chris,
think about this. I know, Gary, you've had a great year in trading. I've had a solid year in trading. The one thing that I refuse to let happen with this election and all the uncertainty that surrounds it is I refuse to let any substantial profits leave my performance this year. Like,
yeah,
it has been
yeah,
a grind to get some profits this year, and it's
right,
been a solid year. It's been a consistent year, just like many others. But I refuse to have this piece of like this next 60 days, right, November to December, to have
yeah,
something stupid happen where we're trying to get so hyped up about this election and then we lose
sure,
sight of where we're going to finish the year. Like
yep,
for a better run, or like just make sure that we're not doing anything silly to sacrifice some of the profits we've worked so hard for the entire year. And then that just goes back to
absolutely.
good sound equity management.
Now, Chris, on to a new subject right here, and that's trading this week, man. Let me tell you something.
Yeah.
I did a session this morning where we looked at different setups. I always do the weekly pivot points for the week. What we picked up is a beautiful pattern right now. For those that that weren't in the session, this is what we looked at. We looked at, and let me go ahead and pull up the document right here so that everyone can see exactly what I'm talking about right here. Now, if you look at this document, what we look for right here is we look for consistency in regards to what currency is getting stronger, what currency is getting weaker. And right now, we identified that we're getting, if you look over here, we're looking for Canadian, looks like, you see the Euro CAD, and then we go further down right here, and we're looking at another Aussie CAD right here. Now, both of them, and then, of course, New Zealand CAD right here. All three of them are looking bearish, which means that this is indicating that there's a possibility that we're getting to a point of the CAD being extremely, in fact, it's going to get stronger. So it's extremely weak right now, which means we're going to start seeing some strength in the Canadian. So when we see three currency pairs indicating that there's a possibility that strength is going to come into the Canadian, this is something we pay attention to. And the same thing goes with New Zealand dollar. Check out the New Zealand dollar right here. Yeah, we've got the Euro New Zealand dollar. We're looking for a bullish move in that. So that means that the New Zealand dollar is going to weaken. And then the same right here, pound New Zealand dollar. It's going to be weaker New Zealand. And then we had another one right here, Aussie New Zealand dollar, weaker New Zealand because they're bullish, right? So when we did that, that makes us think, let's pay attention to the New Zealand Canadian dollar. So if you go to New Zealand CAD right here and take a look at what's going on with the New Zealand CAD, and then also go ahead and take a look at the list, or at least the basket right here. Take a look right here. In the last 24 hours, we did get some stronger New Zealand, did get some weaker CAD. So which means that there may be a turnaround on the New Zealand CAD. So my focus this week is a possible retracement move, a bearish move on New Zealand CAD. So this is going to be my focus, Chris. If we talk about currencies this week, then New Zealand CAD is definitely one of the pairs that I'm going to look at. I'm looking at a weekly target down here that we're missing over here. We're looking for price to move into an overbought condition to start selling New Zealand CAD. But I think the New Zealand CAD is a good setup for possibilities for price to move back further down south. So I'll be looking at New Zealand CAD, grabbing, and again, it's not tight, very tightly correlated to the U.S. elections, although all currency pairs may be influenced in some way, but we don't have direct correlation with the U.S. elections on this one right here. So we've got New Zealand CAD right here. We did take a look at U.S. oil, and U.S. oil is trading at $38 a barrel, but check this out. We also have U.S. oil expected to rally. So we're getting some stronger. If we get some stronger U.S. oil, that's going to push the CAD a little stronger as well. But then we also checked out the fundamentals. See how everything's lining up on Wednesday to look for a time where we can start seeing a change in directional bias. On Wednesday, we have the rate decision. So we've got the overnight rate. They're going to keep the rates unchanged. We're going to have the statement, of course, and the policy report that's going to come out. That's absolutely going to influence the directional bias of what's going to happen on the Canadian. So I think that we may move into a very slow mover this week as we're heading into Wednesday. As we get to Wednesday morning, I think there's going to be a change around. So I'm going to look to see that probably by Wednesday we can start seeing some indication that price is going to move back down south again. And that's pretty much my look on the currency pairs for this week.
Yeah, I like that a lot. There's a decent amount of news. There's a decent amount of news this week. Like you mentioned, just kind of highlighting some of the major ones. I've actually started to go a lot more towards high and medium impact news because some of the things like the cash rate decisions are no longer listed as high impact because they've been the same for so long, and the stance is the same, and the narrative is the same, that they're now like, oh, U.S. Central Bank medium impact news. It's like, that's not medium impact news. That's always something that the market's going to pay attention to. So
it's the verbiage, right? It's what comes out in the statement that really doesn't make, even though they may keep the rates unchanged and everyone's going to consider that that's going to be the deal. It's about what's in the verbiage of how they're discussing the economy right now and whether or not there's a glimpse of a possible rate cut, hike, whatever it is. Yep. That's what's really going to move the market. So even though that may be a medium outlook or impacted the news with the actual rate decision, it's really the follow-up after that's going to make the markets move.
All right, Gary, I got it for you. I know we're kind of running short on time here, but what are your thoughts on cryptocurrencies as of last week? When Bitcoin had a great rally, we started to poke that 13,000 level. We're getting back up near the highs from 2019. Thoughts on the follow-through? PayPal was a big news break last week when they're now allowing PayPal transactions to occur in Bitcoin denominations. We've had the central bank for the U.S., central bank for China, other countries around the world that are looking at adopting some form of digital currencies. The U.S. has not accepted it, but they haven't denied it either. So there's definitely a lot of, and of course it's all speculation right now. It's the rumor mill, but at least they're not denying the reality of a digital cryptocurrency or digital currency. Whether it remains Bitcoin or something else. But I'm just looking at, there's some really good posture on cryptocurrencies. I've been bullish on them for once we had our correction in 2018, 19, I've been bullish cryptocurrency. So, I'm curious to see where we pull back. Do we establish more range-bound conditions, or is there enough to continue to drive this? I mean, breaking above that 12,000 level was a key breakout. Does Bitcoin continue to run and challenge that 2019 high? Do we start breaking? I mean, from really the highs at 14,000, there's not much more other than 17 and 20. So, we could have a range bound move. We could go up to 14 and tap those highs and then fall back into it. Maybe 10,000. We range from 14 to 10. But if we see some trends, what better spot to do it than above 14 and break into like the 17 plus area? I mean, 20,000, I'm sure everybody's looking at 20,000 and hoping that we get back to those highs. But I just wonder if is it the time to take profit at 14 or 17 or 20, or is it like just hang on to this and see if it goes forever? I don't know. I think that there's a lot more that needs to happen to have full-on legitimacy to cryptocurrencies, and more regulation is needed. More bigger institutions and players need to be a part of it. But as we're focused on a little bit of stocks, a little bit of Forex, cryptos, and Bitcoin especially has been making some major headlines the last couple of weeks.
Yeah, I'm just my stand on Bitcoin right now. In fact, I removed all my money out of Bitcoin. I moved it into Ethereum, and we spoke about it in the trade room. I think I even on the AAA session. And I bought everything in at I sold everything on Bitcoin. I held onto it until I saw Ethereum drop back down to $330, and then I bought in with Ethereum at 330. So that was my last buy right there, because I know that if we start seeing the rallies taking place, I'm going to see a lot more revenue, or at least rate of return on Ethereum than I will see on Bitcoin, because it goes a lot faster. Sure. So I'm going to hold on. My stand on that is hold and wait for the breaks of the highs of the all-time highs that we've had. Bitcoin will be 19,800, and then of course the Ethereum would be 1,400 and change.
Yep.
That's what I'm looking at for the break. Yeah, this is if you look at the chart right here. This is what it looks like on the Ethereum. Yep, 1,482, right about there. So that's what I'm looking for, or that's what I'm holding on to. So I've gone in, bought in here. There's that indication right here. I said that's my buy zone right here. Every time price was in this zone, it was buy for me. So now I'm going to hold on to that, and either it works out and we make money, or it goes flat. So I'm just going to hold on to that position.
Cool. Yeah. I will say I was not displeased with my Coinbase account last couple of weeks, just kind of watching it grow, and I'm up like 200 and some % overall, and hopefully there's much more of that to come. Again, I'm looking at the same levels everybody else is. 2017 levels would be a great start. Actually, I was going to bring this up in a team session this week, Gary. I'll talk to you guys about it more tomorrow, but I'm even interested in diversifying into art, so we'll talk about that this week. So look,
into art?
I'm looking for opportunity, man, period. Yep. Because look, if the markets are going to be weird, if the markets are going to be broken, if the correlations don't make any sense, if trading becomes increasingly difficult, there's got to be ways that, look, that's what we do. We're traders, we're investors, we're always looking for where our money's going to get treated best, and I will not, overlook any opportunities. So I'm always looking.
All right, well, good. Well, all right, that pretty much wraps it up. Listen, traders, if you haven't subscribed to the channel, go ahead and subscribe to the channel. Make sure you smash the like button, comment on the video. That'll be awesome. We would appreciate some comments through. Keep in mind that I believe there'll be no AAA session next week, due to the fact that we are doing the U.S. election on the 2nd, 3rd, and then of course the 4th as we go through that period. So we'll be checking that out. If you haven't subscribed or haven't registered for that event, please make sure that you do. Chris, I don't know if there's been a post, if we posted something with a link in regarding the event next week.
Yes, we have it right there. You can see register for day one. We have a short link for that available, so you can see just a few comments up if you're following the chat section. There's a link right there for day one. Day 2 and day 3, I know that there is going to be a follow-up link for that. We'll certainly have it available day 1, but the most important thing is just sign up for day 1. Register day 1. We get to spend, I think we're spending we have 2 live sessions day 1 with everybody. Yeah, so for everybody, for $0, totally free, join us for day 1. You have 2 live sessions with Gary, Tyson, and myself, and then day 2, day 3 for maybe $5, maybe $10, something like that. You can join and trade with us live. And again, multiple sessions from Tuesday, Wednesday as everything unfolds. And we're putting ourselves right in the driver's seat for whatever volatility comes our way, whatever sessions we need to trade. We will have an active game plan for the week.
Yep. Awesome. Chris, thank you very much for your time. Appreciate that. Guys, keep your eye on the New Zealand CAD this week. Expecting a fall in New Zealand CAD. We'll see how that plays out. We'll talk about it in the election period. I'll also be talking about that in my trading rooms. Christian will be covering a lot of stuff in his trading rooms as well. Make sure you guys can connect with us in our trading rooms, and we'll see you in the next session. With that being said, Chris and I want to thank you and see you next time. Thank you.
Take care.